Look, I think a couple of things, and greetings from Abu Dhabi, by the way. A couple of things. First off, if you look at the differential between US bonds and European bonds, you're talking a number of percent. And when you're thinking of that sort of headline number, the attraction to capital is so great, and that's been a very, very strong spur to the US dollar index. And I think, as far as Jerome Powell's concerned, the Fed chair, if they're going to see further rate rises you're talking March and you could be talking mid next year, then that's only going to attract more capital to the US dollar, which in turn I think you're going to see 101, 102 the US dollar index, currently around that 97 headline number. There's plenty of upside left to go, very stronger dollar.
Right. So, in fact, the dollar index is even held on after the, onto the rise after the U.S. October retail sales data that did come out. 97.4 was ahead of retail sales. From here on, where do you see it moving? What are the kind of levels that you would be tracking?
I think you're going to be looking at a 98, 99 by month's end. I feel as though there's too much momentum to the upside as far as, a possible rate rise in December. The market is really, pricing that in. And the other side, of course, is that the uncertainty as far as euro growth, emerging markets seem to be very much tanking. And there's a little bit of a misstep in the sense, the booming economy of the US, there's not a lot of other economies that are actually booming. If you look at the China market, you look at the other, emerging markets, it's been very much a washout year, 2018. It'll be a year that a lot of people and a lot of traders want to put behind them if you were long equities. But there's plenty of other markets that have performed very, very nicely, and I think that's the great attraction to, financial institutions and financial markets.
Right. Peter, overall, there has been uncertainty with regards to where Brexit goes, and that has actually led to the pound plummeting as well. Now, overall, what's the sense that you're picking up with regards to where the pound goes? And in turn, it's plummeted against the dollar as well as the euro. And in turn, what's the kind of impact that we could see on emerging markets, especially if you're talking from an India perspective?
Well, I think that there's further upside, first off, for that US, as we've discussed, that US dollar index. And that, in turn, is going to force pressure. The uncertainty as far as whether Theresa May and Prime Minister May will remain in power, it just seems to be a basket case, that whole Brexit. From anyone that's not English and looking at it from an outsider's view, it's just it's hard to comprehend. What's happening? What is the actual exit? How's it going to look? And is Theresa May going to remain in power? She's got ministers that are walking out on her. There doesn't seem to be a concerted or a fundamental strategy moving forward that everyone's behind her, and that's my leader, and that's what everyone's, falling into line. There seems to be very much an emotional play here from all of the constituents that seem to be, have a different agenda or a different viewpoint as far as how Brexit should be integrated and, the pathway forward. I think it's going to be, uncertainty for the English pound and, again, pretty good opportunities to, be a part of that.
Pretty good opportunity to be a part of that as well. Peter, moving to oil as well, EIA has reported 8th straight weekly rise with regards to where US crude stockpiles go. What do you think would this mean with regards to crude prices? Because again, we are seeing levels in the range of around $50 to $65 per barrel. Again, in terms of US NYMEX as well as Brent. What's the sense that you're picking up? Do you think we will see a bottom coming in soon?
Well, Iran, I've been looking at this market now and trying to study what exactly is going on. I think it really started, if you put your mind back around about 6 weeks, President Trump said crude prices are too high. Simple as that. He wants to see some action from OPEC. Well, I tell you what, the market's down 25%, and that when a president talks, you certainly see the world take some action. The Khashoggi matter hasn't been put to bed, and the uncertainty as far as where OPEC's sitting at the current time. I'm in Abu Dhabi for that ADIPEC meeting. OPEC met last Sunday. There was talk that there was going to be, supply cuts and everything was going to be, quite a good week moving forward. Monday wasn't a bad day for crude. Tuesday, it was smashed 7 or 8% to the downside. Wednesday was really another move to the downside. Thursday's taken a little bit of a wake-up call and just seemed to, settled down a little bit and that volatility's dropped out of it. I think it's going to be a quiet couple of days because after you've seen those big falls. So I'm expecting it to see further downside over the next couple of weeks leading into the meeting in the 6th of December in Vienna, the 175th OPEC meeting, Aaron.
Right. But Peter, usually, towards the lag end, when you talk about the winter season, the demand with regards to crude and fuel is fairly and normally, weak. And this is what usually pressurizes prices as well towards the end of the year. Now, with the first week of December OPEC meet that we are watching out for, with the usual trend of weak oil prices, do you think there will be some bit of, volatility that would, erupt on that front?
Absolutely. I think the volatility is here to stay over the next couple of weeks for the reasoning. First off, you've got the uncertainty as far as that rate rise in December. The US dollar will probably continue to strengthen. Any market that falls, and you know this as well, you've been watching these markets for a long time, Moran, you know as well as I do, that if you see a 25% fall over a period of 5 or 6 weeks to something like crude, it'll bounce. And it'll bounce probably 5 or 6 or 8% to the upside, then it'll come back down. Volatility is what it's all about, and you're going to see that sell-off as far as US equities. They seem to be a little bit uneasy at the moment as well with big spike moves. So, as I said, 2018 has been an enormous volatility year, and I think that will continue into 19 with so much uncertainty as far as, what's happening with the Brexits, where does Italy play, what's happening with China, India, you name it. Everyone seems to be having some woes at the moment across so many different sectors and political bases as well.
Right. Peter, I don't know if you track natural gas very closely, but we've seen natural gas prices which have jumped by almost 18%. It's the biggest percentage gain that we've seen in 14 years as well. And 15-year low is what we've seen in terms of where stockpiles go. Now, what do you make of this with regards to natural gas prices as well going ahead?
Well, I mean, that's the craziness of the market. You've seen crude take a big hit to the downside. You've seen nat gas go, very, very strongly to the other side. So they're certainly not in tandem. There's no correlation between the two. And when you're looking at it, there is obviously, from a weather side of it, and of course, with those cold winters, you've got snowfalls now in New York City. So all that northeast region, the natural gas demand is certainly, very, very strong at the moment. And if you have a very bleak winter, which it's tipped, that's going to add more demand side. So I think that you're probably going to see further upticks as far as nat gas. I will say this from a trading perspective, if you want something that's wild to trade, that natural gas market is just so incredible when you look at the price moves. It leaves most markets for dead. It's just incredibly volatile, and, traders do enjoy trading it. Just be careful as far as your stop losses, but I'll tell you what, it's certainly got movement.